Hi, welcome to today's Advisor Chat. Today with me I've got Zach Brabin. Now Zach's been an advisor with us for 7 years, comes to us with a wealth of trading knowledge and trading interests. And one of the things Zach's been focusing on lately is helping clients to build portfolios utilising the option market. So welcome along, Zach. And what can you tell us about these strategies you've been looking at?
Thanks, H. So something I've been working with clients on is selling cash-covered puts to buy stock and build a portfolio. So it can be really great for someone that's just sitting on cash and knows what prices they want to buy for stock, or they just want to be more active in the market and put some money to work that otherwise may not be doing anything. So
okay, so basically what they're looking at is someone who wants to buy a share at a certain price. Rather than putting an order on the screen to buy the shares at that price, they can utilise the option market as a way to try and purchase the shares at a discount.
Yeah, that's right. So it might be helpful if we break down the strategy a little bit. So there's two components of it. There's the cash covered component of it, where the cash required is used to cover the obligation of selling the put.
Yep.
And the other component is the put component. So if we look at what a put option actually is, the easiest way to think about it is like an insurance contract.
Yep.
Where the buyer of the put is buying downside protection on their stock, and the seller of the put, which is us in this strategy, is selling them that insurance for a premium, which is where the real benefit of this strategy is. But we're also telling them that we're happy to buy their stock off them if the price does move under a certain level. So the real benefit is receiving that premium.
Okay.
Certainly add up over time.
Okay, so basically you're saying if I'm happy to buy a share at XYZ price, you're selling a put option at that particular level, you get some cash in the way of premium, and then if the share is below that price, you obviously would get to buy the shares at that discounted price from where it currently is.
Yep.
Well, okay, that's a fantastic strategy because it does produce income, doesn't it?
Yep, it definitely does. So a great stock I'd be happy to do that on at the moment, and it's a great example, would be Fortescue.
Yeah, okay.
So Fortescue's trading around $20 at the moment.
Yep.
I'd love to own it at 19, and if you were building a portfolio, that'd be a really great level to get set at.
It would be, wouldn't it? Quite a attractive price, yeah.
Yeah, so with this strategy, we could go into the market and sell a $19 put expiring in a month's time.
Yep.
And for that put, we might receive 40 to 50 cents. Okay. Which is actually nearly 2.5% return already on the trade.
Yep.
So over the month at expiry, let's say Fortescue's at $19.50. That the owner of that put isn't going to want to sell their stock to us at 19.
Yep.
Because the market price is at 19.50. So we won't get to build our portfolio in that instance. But we will get to keep the 50 cents of premium that we've received.
Oh, okay, so the option would just lapse, is that effectively what you... Okay.
In that scenario, that the option would expire worthless.
Yep.
But we could go into the market and resell it for another month. So.
Okay, so you could just keep moving it out each month as it's suited and as market conditions allowed. Okay.
Yep. So if we received another 50 cents of premium for another month's worth of time, we've now received $1 worth of premium. And let's say at expiry this month, FMG is at $18.75.
Yep.
And the owner of the put is going to want to sell their stock to us at 19, which we've agreed to when we sold the put.
Yep.
So we have to buy the stock at 19, but we've actually received $1 worth of premium. So
okay, the two lots of premium.
Yeah.
Okay. Wow.
So our effective buy price is actually $18. So you can see how that would add up over a few months of time.
Yeah. Okay. So what are the risks of this sort of strategy? There must be some controls and things that you sort of look to manage with it.
Yep. So generally selling puts, there's definitely some risks involved, but with this strategy, I think the key to it is that we really do want to build the portfolio. So as long as we've got our option sizing correct relative to the amount of cash we want to invest, the risk involved is really no different to jumping in and buying the stock today. Yeah,
it actually sounds to me like a little bit lower risk because you're getting that cash in, which obviously helps lower your potential purchase price. So that's really interesting.
Exactly.
So if someone with say $100,000, in an example of Fortescue, they could sort of look at say 5,000 shares, that'd be 50 contracts.
50 contracts.
So that they could actually get a really good premium each month doing that until maybe they have to buy the stock, which obviously is the ultimate goal.
Yeah.
So wow, it sounds like a really interesting strategy. And obviously with stock like Fortescue, as you're mentioning, Fortescue's got some really good dividend returns, hasn't it? So the
Yep.
yield on it's very attractive. So
Absolutely.
very interesting. Okay. And what sort of clients do you think this suits? Is it sort of for anyone just looking to get into that portfolio building stage?
Yep. So it can be someone looking to build a portfolio, just
Yep.
sitting on cash, or someone that already has a portfolio.
Yep.
And is sitting on cash and wants to put it to work.
Yep.
And they know what prices they want to buy stocks at. So
Okay.
that's the key to it. You can really pick where you want to buy stocks.
Yeah.
stocks
Okay.
at and work from there.
So with the levels you look at, it's probably something where your experience comes into it, looking at what is the appropriate price level to say I'd like to buy that stock at this level.
Yep.
That's probably where quite a lot of assessment comes into saying that's a really good purchase price.
Yeah, and clients
Okay.
will look at like technical levels, or
Yeah, okay.
maybe if they're doing it on the banks, they might be chasing a 5% yield. They could utilise that.
So base it around those.
Yeah.
Okay, well, fantastic. So if someone wants to look at entering these sort of strategies, what would they need to do? Give yourself a call?
Yeah, give us a call and we'll run through it with you.
Fantastic. Okay, well, a lot of great information there, and something I think for the average investor probably makes a lot more sense than just buying stock when the market's down one day, just jumping in and buying a particular stock. Looking at these key levels and these key strategies to really enhance their returns or improve their entry points while getting an income. So fantastic. That's some great stuff there. So thanks for coming along today. We'll wrap it up and look forward to talking to you all next time.